Thank you for joining us once again, Bob. The first week of the month is upcoming. We are used to this being a busy period in macroeconomics. Is that going to be the case during the upcoming week?
It's a particularly busy week ahead on the economic data front. Key stats from the US, we're going to be looking at the ISM private sector PMI numbers. Obviously, the non-manufacturing will be the key stat of the week in terms of private sector numbers. The focus will then shift to employment figures through the second half of the week. On Thursday, we've got ADP non-farm employment change and the weekly jobless claims figures, and that's before the non-farm payrolls and unemployment rate at the end of the week. Obviously, key for the economic recovery is improvement in labour market conditions. However, that will also spur further speculation on whether the Fed will need to make a move earlier rather than later in terms of monetary policy. So those are the key stats for the dollar. For the euro, private sector PMIs, barring marked revision to prelim numbers from Germany, France and the Eurozone, expect Italy and the Eurozone numbers to be key. There's also retail sales figures for Germany and the Eurozone and prelim inflation figures for May for member states and the Eurozone to keep the markets busy through the week. For the pound, it's a quieter week. We're just looking at finalised private sector PMIs and the construction PMI. Key will be any revision to the service sector PMIs. Away from the economic calendar, obviously we're going to be looking at any signs of a marked pickup in consumption to support the economic rebound, so that will also influence in the week.
Meanwhile, what about the commodity currency countries? Anything going on in Canada, Australia or New Zealand?
For the loonie, it's also a busy week ahead. Key stats in the early part of the week, we're looking at RMPI numbers and the all-important GDP figures. These will be key, particularly following the hawkish Bank of Canada. So do the numbers stack up? In the second half of the week, we're looking at employment figures and IV PMI numbers. Obviously, we'll be expecting the employment figures to have a bigger impact on the loonie. For the Aussie dollar, busy week as well. We've got CapEx and operating gross profits for Australian companies in focus. In the second half of the week, we're going to be looking at retail sales and trade figures. Key for the markets and the Aussie dollar, however, is the RBA monetary policy decision on Tuesday. We saw a more hawkish than expected RBNZ last week. Will the RBA be more aligned? For the Kiwi dollar, it's a relatively quiet week with business confidence and building consent. Expect business confidence to be key for the Kiwi dollar.
What about Japan and China? Is there anything scheduled to happen in these countries in regards to macroeconomic data?
For the Japanese yen, relatively busy week. Key stats early in the week, industrial production, retail sales figures. Both sets of numbers are going to draw interest. Obviously, retail sales will be key, as will industrial production. Then we're looking at CapEx figures for the first quarter. And at the end of the week, household spending. So those are the areas to look out for the Japanese yen. For the Chinese yuan and the broader market, risk appetite, we're going to be looking at private sector PMIs. We've got the MBS and Kaisen numbers out. Expect the Kaisen manufacturing PMI to be key in the week.
Moving on, is there anything to note in regards to geopolitics?
On the geopolitical risk front, obviously we now have the issue with Minsk, and then that could draw in Russia, and then there's China and relations with the US, and then obviously there's the Middle East and Iran and the nuclear agreement as well ahead of the presidential elections. So these are the key areas to look out for. It's relatively quiet from a market perspective, but we do need to monitor these ongoing.
As always, Bob, thank you for your insight. Join us again next week. That's all for this edition. Make sure to check us out on all our social media platforms.